So the price of a single family home in Calgary, Alberta has seen price decreases over the last few months. And in today's video, we're going to discuss where those price decreases are and if they're going to actually go into 2025 into 2026. A couple of things that we're going to consider is GDP growth here in Alberta. The GDP is expected to increase going into 2025 and into 2026. But questions have been raised as why have we not seen any sort of price increases since the interest rate has seen such sharp falls? And I would agree with that. There's a lot of buyers that are still holding off until the end of the year to see if the market has actually bottomed out before they actually go ahead and make a move. We're just starting to see winter snow, and we're just starting to see a lot of that colder weather come into Calgary. So I would imagine that there's probably going to be a lot more slowdowns before we see any sort of uptick. But my name is Adam Fyfe, your Calgary Realtor. If you're looking at getting into the market, you have to set up a call. It is very important for you to get a general understanding of what is going on in the market, how we can better position yourself for success in this market, and try to make a plan, even if that plan is 6 to 12 months away. If you want to know what your home is valued at, the market is slowing down. We're seeing price decreases all over the city. It is very important for you to have a general understanding of what that asset has in terms of equity if you're looking to leverage that or maybe offload that in the new year. So let's get this started. Now, let's go back to this right up here and see what the Calgary Real Estate Board has written about Detached. If you want to read it on your own, go ahead, skip to the next chapter, or listen to my storytelling. Detached home sales rose to 1,071 in October, a gain over last month and nearly 10% higher than last year. So we're seeing an increase. While new listings were higher than last year, they slowed over last month, causing the sales to new listing ratio to rise to 69% and preventing any further monthly gain in inventory levels. With almost 2,200 units available, the months of supply remain near 2 months, a gain over the under 2 months reported last year at this time, but slightly lower than last month. Okay, we're not going to talk about the price point because we're going to get into that in a lot more detail in this video. Now, this chart here, love this chart here. I think it's an absolutely fantastic chart. Let's kind of dive into it a little bit. So you can see over the last few months, we've seen some price decreases for the total benchmark price of single family homes. That doesn't mean that every single home in Calgary is seeing decreases. That's just meaning that the benchmark attributes for Calgary are seeing less value. If we look here, you can see that the inventory actually saw a slight decrease from last month. And that is due to an increase in sales and potentially a decrease in new listings. But what we just read, there was a slight increase. So we can see that it was still a decline, right, in the price point, but it wasn't as sharp as what we saw over the last 2 months. So it's a little bit of a softening decline compared to what we've seen last month. Now, here's a quick overview of the single family home market in Calgary. We're not going to touch on too much of this stuff because we're going to dive into it in a little bit more detail in future slides. But you can see that for the month of October, we had $859 million worth of sales in this market, which was up 21% of last year. You can see compared to last year, month to month, we saw an 18% increase in new listings, 1,500 new listings. And we had an increase from last year of almost 40%. So we have a lot more selection for the single family homes compared to what we had in our hyper tight market last year. Okay. Sales to new listing ratio for October was almost sales to list price was 98%, meaning that a lot of the homes that were listed that month actually got below its actual listing value, what they put it up on the market as. 32 days on market. We're not going to talk about price, but we can look at year-to-date stuff, right? Again, last year, very, very hot market. I don't want to compare too much to that market because now we're starting to inch into more regular territory, right? We've seen a decrease in sales, an increase in sales volume, an increase in new listings, an increase in inventory. Once the supply is increased, the sales to new listing ratio year-to-date is still above 100%, but it's slightly up from last year. And then the days on market, for whatever reason, has actually slowed down year-to-date compared to last year. Okay, so where are all these sales currently happening in the city? So if you look at this chart here, you can see that South Calgary actually had the majority of sales. There's been a big push in South Calgary recently with activity in that area. So let's also remember that South Calgary actually has both Southwest and Southeast street abbreviations. So if you actually zoom in here, you can see that it's not a very good looking high quality photo, but you can get the picture. You can see McLeod Trail here, and you can see all of the brown is South Calgary, going all the way down, including places like Legacy, as well as Pine Creek, which are our newer communities here in the city. So When you start to break that down into percentage wise, you can see that South Calgary saw 23%, where the next closest was Northeast, right? 15, 13, 14%. Now, how about those new listings and how about that inventory level? This is exactly where we need to try and gain a better understanding of what is going on in this market, right? So you can see there was an increase from last month in terms of sales. You can see there was actually a decrease from last month in new listings. So that's one of the main reasons as to why we saw a decrease in inventory levels. So yes, there still was a price reduction, but it wasn't as aggressive as the month before, right? We are noticing some slowdowns, right? It went from 27 days to 32 days, which is common in this time of year, right? It does start to slow down. You saw 32 days in November of last year, but we're at that same level already in November. So are we going to see some continued increases going into December? Absolutely. But are they going to be as aggressive as some people are hoping or expecting, where I see these comments about 8 to 15%? Probably not, right? We are noticing an increase in activity, but that increase in activity could be caused by that recent rate reduction, pushing people over the edge to actually go ahead and purchase some sort of Calgary real estate. So with that being said, you can see that the trend or the months of inventory is still ticking up. Yes, we are down, right? We did drop from last month, but the overall graph is still going up. You can see that last year, if we just look here, we were in hyper tight months of inventory. There was just not a lot to choose from last year, which caused an increase in our price point that we haven't seen before in quite a long time. This year though, different story. Economy slowed down. Different things are happening in our Canadian market and our economy as a whole that people are a little bit more nervous on making a move. But Calgary real estate is still very active, even though people are screaming from the roof that the Canadian economy, which is probably likely going to see some sort of recession and slowdown going into 2025. Now, let's just kind of look at where all these sales are. You can see that the $700 to $1 million price point has seen the most amount of activity that we haven't seen in a long time, right? If you go back to 2021, you can see year to date, we had around 1,900 sales, where this year we're up to almost 4,500 sales compared to that same year. You look at the difference here between the $400,000 to $400,000 price point, right? There's not a lot of homes that are worth $400,000 anymore, where in 2021, there were. Pretty crazy eye-opening stuff here, right? You can even see the $500,000 price point has significantly dropped in activity just because there's not a lot to choose from in that price range. So if you're in that $500,000 price range and you want to find properties, it will be a little bit harder for you to try and find that good deal because there's just not a lot to choose from. And here's a visual that explains that. So if you want to know how this has been, what this actually looks like in a numerical sense, you can pause it here. You can see October, and last year, right? So you can see just the different amounts of sales there, but you pause the video and watch it on your own. So let's look at the months of supply. Let's actually try to position this to better reflect your personal situation so you can gain a little bit of value from this video. You can see that the detached market here, if we just zoom in, you can see that the detached market here in general is still hovering around that 2 months of supply. That is still a seller's market. Yes, we have slowed down. Yes, we're going towards more balanced conditions where we might not see as much price movement, but we still need to get there, right? We are going to see some decreases in price point, but we're not going to see any aggressive decreases in price point like we might in Northeast Calgary for apartments, where their month supply is 4.5, which is clearly a buyer's market. There's a lot of activity to choose from in that apartment market, right? So if we actually just scroll here, you can see that the north and the city center are in balanced conditions, right? We're probably going to see a little bit more price decreases in there, not as much movement, right? A little bit of a slower pace compared to the other quadrants of southeast, southwest, and northwest Calgary, right? These markets are still technically a seller's market. So let's continue on here. Year-over-year price growth, right? You can see that the more affordable options in Calgary and Northeast are still seeing 14% year-over-year price increases. They are a more affordable option here in Calgary, and a lot of people have bought in that quadrant for investment. You can see that the lowest price increase is actually only 6%, and that is in North Calgary. Still a year-over-year increase, but not as intense as what it was 6 months ago when we were seeing everything above 10% year over year. So let's continue on here. Now, if you want to know what your home has increased or decreased or what has happened in this market, go ahead and scan this QR code. This will take you straight to the instant home evaluation tool if you're curious about what that looks like, or you can actually go to this link here, which is in the description, put your home address in, it spits out an instantaneous home evaluation right away. I have been very busy. I haven't called a lot of people, but myself and my team will call and we'll introduce ourselves, figure out what your situation is and see how we can help. If you're looking at just figuring out what your home evaluation is at, that's fine, right? Use the tool, get some value from that, move on, no harm done. So let's actually look at the benchmark price, right? The benchmark price is quite fascinating for the Calgary real estate market, because when you look at this, you think that everything is the same in terms of attributes, right? But you got to be very careful when you look at these price points that you're overlapping the attributes behind that, because you look at somewhere like West and City Center and you say, oh, they've got the same price, right? They're both around $900 and let's call it $50,000. But when you actually go to the benchmark attributes, which I've linked in the description, I actually have gone through and put all of the attributes into a nice, easy to read spreadsheet. So when you go and you look at West, right? And we just go for year built as an example, you see 2000, and you go to year built in 1955 in City Center, you go to, oh, okay, well, if a home built in 2000 in City Center was also listed, do you not think that it would be a lot more than what it would be in City Center? Probably, right? You'd probably get a lot more. So if the attributes were the same, that would mean that City Center would actually increase quite dramatically compared to West Calgary. So keep that in mind. Now, this is kind of the bread and butter of where a lot of people want to get their information from. They want to know how their quadrant is upholding compared to the other quadrants. And you can see that a lot of the quadrants are seeing price decreases minus Southeast Calgary. Southeast Calgary has actually seen a price increase due to the activity there. Maybe agents are listing their homes at, the right price, and they're spurring a lot of activity, right? If you list it under market value and you get a lot of activity right off the hop, you might get more people who place offers that are above ask, right? So just keep that in mind. There's still a lot of activity going on in the Southeast quadrant. You can see that this is the sales, the new listings, the sales to new listings ratio on average 70%. You can see places like West Calgary saw 84%, and you can see places like South and Southeast are above 70, where North only saw 49%, under 50% sales to new listing ratio, 101 sales and 223 new listings, right? They are still seeing year-over-year price growth all across the board, but month over month, everyone is seeing some decreases, especially when you start looking at detached Calgary. So when you look at different quadrants and different activities, you really want to make sure that you're putting into perspective what has happened in the last little bit, how much sales have been came off the market and how many new listings came on the market, because if the inventory is increasing, you're going to notice a faster decline in price point. So let's continue on here. I do apologize. I feel like I'm a little hiccupy today. I'm using a new system here, which is pretty rad, where I can kind of hop back and forth here, go here, and then all the way back to here, which is super slick. So it's going to take me a few videos to get used to that. Now, we are noticing year-over-year price, we are noticing year-over-year percentages decrease, right? So we are still in that, 8 to 9% year-over-year increase in terms of price point compared to last year. We're not at those highs of 14% that we saw earlier on in the year. Are we going to dip down into the negatives? I doubt it. I don't personally think that the Calgary real estate market is going to see any sort of negative year-over-year price growth. If you look at early last year, right, we did have those highs of around 18 to 19%. We slowed all the way down to about 3% year-over-year growth, but then we took back off again up to 10%. Are we going to go back up to that 10% year-over-year price growth? I don't know. It really depends on a few things. How strong the economy is in Alberta, how far they actually decrease that interest rate, and what actually goes on with our migration levels here in the province. It's very important to watch all of these factors. Our unemployment rate is increasing. I understand this. A lot of people like to comment that, and it's true. A lot of people moved here, and our infrastructure and our job market just couldn't handle that amount of people. It was inevitable. There was going to be increases in our job market. I would imagine, or decreases in our job market. I would imagine that there's probably going to be a lot of people that leave Calgary. Once they experience a winter here, they might not like it, right? There's a lot of people that come here with these high hopes of a beautiful place, and then they realize it's freaking cold, right? So these things could be an factor, as well as many people might leave the province. So where are we at and where are we going? Right now, we're probably going to see a softening in price point. It's pretty evident. I would put some money down to say that we're probably going to see some decreases going right into January. February, March, I would imagine we're probably going to see some increases. I would like to wait and see what happens with these interest rates, because that's going to be a big proponent as to what happens in this market. But I would imagine 2025, Calgary is going to see some increases. That's my personal prediction, but I could be wrong. We'll see what happens on a provincial level. We'll see what happens on a federal level. When's the election coming? What policies are being put in place? Are we going to continue to try and fight for our natural resource sector? If we end up winning some cases there, we're probably going to see an increase in economy. The Trans Mountain Pipeline has been a good thing for our economy. It has spurred some job growth there. So it really just depends. Like, there's a lot of uncertainties in the air. I think there's a lot of people online that are screaming, everything's going to crash and burn. Everything's going to see 10 to 20% decreases. I just don't see it yet. I'm sorry, but I just don't see it yet. There's just too much current drive for Calgary real estate, both from speculative investors as well as people looking to buy and sell here. Trying to buy here to move here. There's a lot of good growth. There's a lot of good opportunity here in the land of the prairies. So if you have any questions, go ahead and reach out. Really appreciate everyone who has followed along with this channel. Feel free to shoot me a text message, ask your questions, let me know what you're thinking, or shoot me an email. Let me know what it is that I can help with and how I can guide you in the right direction. So thank you very much. We'll see you on the next one. Hope you like the system. Peace.